Most people think being financially successful at 30 means having a good salary and money in the bank.
But a good salary doesn't automatically mean financial freedom. You can earn $70,000 a year and still feel completely broke. Two people can earn the same income and live completely different financial lives. Because you're comparing your entire life with carefully selected pieces of somebody else's.
So instead of asking who looks richer, let's ask what financial life actually looks like at.
So instead of asking who looks richer, let's ask what financial life actually looks like at 30. We'll look at the numbers that actually matter. And the results may completely change how you see your own situation. Because being but doesn't always mean you're failing. For millions of Americans, college doesn't end when the diploma arrives. The bill can follow you directly into your career.
Student debt can take hundreds of dollars from your budget every month.
Money going toward debt is money that can't immediately build your financial future. Imagine two people earning exactly the same salary. One has no student debt. The other still owes tens of thousands.
Their income may be identical, but their financial freedom isn't. The difference becomes obvious every time the monthly payment arrives.
And for some borrowers, that payment can remain part of life for years. Then there's credit card debt.
And not every balance comes from reckless spending.
Sometimes ordinary life simply becomes expensive at the wrong moment. A major car repair can arrive without warning.
A medical expense can appear just as quickly.
Here we see our growth for last year. And sometimes the equipment you depend on for work simply dies.
When savings aren't available, the credit card becomes the emergency fund.
That's when a small problem can become a long-term financial problem. High interest makes carrying a balance especially expensive. Consider Alex, a fictional example of what this can look like. Alex earns about $62,000 a year. He has a steady job and doesn't live an extravagant lifestyle.
Then his car needs an expensive repair.
Soon after, another unexpected medical expense arrives.
Then his work laptop stops functioning.
None of these expenses were part of his original budget. The balance starts growing.
And now his next emergency could create even more debt.
Then we reach one of the biggest challenges for today's 30-year-olds, housing. Rent can consume a huge portion of your monthly income. Buying a home can require an even bigger financial commitment.
Imagine a $500,000 home. Take it the $100 home.
A traditional 20% down payment would require $100,000 up front. For many 30-year-olds, that's an enormous amount of cash to accumulate. And the down payment is only the beginning.
There are mortgage interest, taxes, insurance, maintenance, and repairs.
That's why renting and buying can both feel financially difficult. For some people, the numbers simply don't make either option comfortable. And this is where comparison starts doing serious damage.
You see people your age buying homes. You see expensive cars and perfect vacations. And perfect vacations.
Then you look at your own life and wonder what you're doing wrong.
But you don't see what exists behind those pictures. You don't see the loans, payments, or financial help behind the lifestyle.
Looking wealthy and being financially secure are completely different things.
Someone with an expensive car may have very little saved. Someone driving an older car may actually be building serious wealth. The important number isn't what people see, it's what you actually own minus what you owe.
Now let's talk about savings.
Financial advice often makes 30 sound like a deadline.
Save for emergencies, invest, pay off debt, buy a home.
The list can become overwhelming.
But early adulthood often starts with low income and high expenses.
Then income increases, but responsibilities often increase too.
Life keeps adding new financial priorities. That's why saving a huge amount every month isn't realistic for everyone.
The target matters, but so does the path you take to reach it.
Small amounts can still create momentum when repeated consistently.
Retirement is another area where 30-year-olds often feel behind.
At 30, retirement can feel so far away that it's easy to ignore.
There's always another reason to wait. But time is one of the most valuable tools an investor has.
Starting earlier gives compound growth more time to work. Don't delay your investments. You don't need to become wealthy overnight.
Consistency can matter more than dramatic one-time contributions.
The key question is whether you're moving in the right direction.
Your financial health is bigger than one account balance.
One of the most useful numbers to track is net worth. Start with everything you own. Then subtract everything you owe.
What's left is your net worth.
But a negative number today doesn't automatically mean a bad future.
What matters is the direction your finances are moving. What matters is moves are moving.
A higher income doesn't help much. Every raise disappears into higher spending. Your financial trajectory can matter more than your current snapshot.
So where does this leave the average Fritz 30-year-old? Possibly carrying debt, renting, and having less savings than expected. And possibly feeling like everyone else has already figured life out. But 30 isn't a financial finish line.
Build your own momentum by improving the numbers you can control. Build your own momentum by improving the numbers you can control.
Financial freedom usually comes from hundreds of small decisions repeated over time. Thank you, I appreciate it. The decisions may look insignificant today, but they can completely change your future.
So don't ask whether your life looks rich enough at 30.
Ask whether you're moving forward, because being behind at 30 isn't the real danger. Staying stuck for another 10 years is.